Good afternoon, everyone. Today I'm chatting with Colin Healey from Premier American Uranium. I find Colin fascinating because he was an analyst at Haywood when they were backing NexGen Energy, which made a major discovery and today have what's considered by most people to be the number one undeveloped uranium deposit in the world. So I picked Colin's brains in terms of where he thinks the uranium sector is heading, what he likes in terms of junior mining, and also we get into what could happen with some of the rumors circulating about Russian enriched uranium not being allowed to make its way west. All right, everybody, enjoy the interview. Colin, thanks so much for joining us today.
Thanks very much. Really happy to be here. Appreciate the time.
So, my understanding is that you're a former uranium analyst, which is exciting for us to get to chat with you because I'm sure you have a whole bunch of thoughts on the uranium sector. Let's start with the big picture. Uranium has seen quite a bull cycle since, I guess we could say maybe 2021-ish, up nearly 3x. Recently, it's pulled back a little bit, but might just be a healthy consolidation, could just be part of the bull run. What's your take on where we are right now in the uranium cycle?
I think we're in the very early stages of the uranium cycle. We're seeing what I would definitely agree is a healthy pullback, or at least in what's been an extremely volatile uranium price environment since we moved from $25 all the way up to 107 in the last several years. I mean, we're sitting well above the averages of 2023, and I think what we're seeing right now is a bit of a pause. I think that some of the fundamental buying that's out there is waiting for direction in terms of where they can buy, and as we going forward from here, I think we push this year back up into the triple digits. As an analyst, one of the last things I did was redo my price deck and supply demand model, and I saw triple digit prices for at least the next 3 years. That was specifically around what I believe is necessary in terms of incentive prices to fill what is just an obvious and clear supply demand gap that needs your higher uranium prices to support, especially in the near term, before we can turn on much larger sources of supply.
So you were an analyst at Haywood, right?
Yeah, that's correct.
So my understanding is that Haywood was a big supporter of NexGen in the early days. Is that accurate?
Yeah, we may have been the first research group to cover it, but I'd have to fact check that.
Were you on that name as an analyst?
Yes, I was.
So what was that like covering NexGen? Is it fair to say that it blew away your expectations?
It definitely blew away our expectations. It was an interesting time in uranium. It was post Fukushima, and a couple things were still happening. I think Rio Tinto closed the acquisition of Rough Rider post Fukushima, but after that, there wasn't a lot interesting happening in uranium space, and uranium prices were slowly declining. And then, Fission discovered Triple R, NexGen discovered Arrow, and it was, if it wasn't for those names, it would have been extremely hard to kind of cover the uranium space during that time. Uranium prices were, working their way towards $18 eventually. And, the market is still very interested in discovery with those extremely high grade deposits and just, unbelievable in situ rock values. It was a relief to have something to talk about that was kind of investable in the space and was going to continue to go up in my view, based on the discovery potential. So it's quite a relief to have some big discoveries happening in a time when uranium price was difficult.
As an analyst, do you think that, I know we talk about this a lot when our team is just looking at uranium and doing our homework. It feels like NexGen is this potential catalyst to actually drive down prices considerably. When you look at just how much they say that they're going to be able to produce, 30 million pounds a year is what they say that they think that they could get up to. That's bigger than Kazatomprom, who's easily the biggest group out there. Do you think that NexGen really could dampen prices, or do you think that the bullish outlook on just uranium demand in general is going to take care of it?
I definitely agree that uranium demand is going to absorb everything that NexGen can produce, everything that Fission can produce, everything that Denison can produce, and everything that Kazakhstan looks like they're going to produce. Kazakhstan midpoint of guidance 2024, I think, is around 56 million pounds. But extremely large, over 40% of total global supply. But we still see a substantial supply gap right now. And as we move forward, the you know the sources of production that are going to fix the supply gap are some of the highest risk, like this new development, greenfield stuff, um, can be delayed for any number of reasons. So these Athabasca Basin new producers, they're great companies, fantastic assets, and doing all the things properly. In my 16 years as an analyst, I watched a few mines come online. you know I never saw one that didn't have at least some delay, happen slower than we thought, and I still don't see NexGen's production plus, depending on what Kazatomprom can accomplish. Midpoint of guidance 56 million pounds. In September 2023, they were talking about 100% of subsoil lease agreements, which would have put them at over 80 million pounds in 2025. And I don't think there's anybody left on my side of the business who still thinks they can get there in 2025. I think the best year of ramp up they've ever had is 14 million pounds back in 2009 with a lot of preparation ahead of time. The you know they're posturing, or not posturing, they're pulling back for sure on the potential to increase by 24 million pounds year over year from 24 to 2025. But I think they're sometime in August of this year, we're going to find out what their real guidance is, and it's going to be 10 to 15 million pounds lower than people think, maybe close to 90% of subsoil use agreements. But that plus NexGen, if NexGen's online in 2029, ramping up and adding 25 million plus pounds to the market, I still think that we're going to be in a position to absorb all that and still not be oversupplied.
One of the topics that I don't know that gets talked about a lot in the uranium circles, at least for us, it's something that we increasingly talk about with CEOs of publicly traded companies after interviews. But given that you're a former analyst, I'm just going to throw this out there. It appears in we're seeing rumors online about this idea that Russia may have their uranium banned from the West. And one idea that I've heard from one executive is, if the U.S. even floats that out there, Putin will likely respond with, "That's fine. You're not going to grandfather this in. There's just no more uranium coming your way." He has a lot of influence over Kazakhstan, and it is a card he certainly can play, and it could result in rolling brownouts across the U.S. How much thought do you put into Russia, or the uranium that comes out of Kazakhstan no longer being able to enter the West? And do you think that this is a potential major catalyst that looks like it's going to come to fruition over the next year?
Over the next year, I don't see, like, probabilistically, I don't think that we're going to see Kazakhstan uranium not reaching Western markets in the next 12 months. But I think longer term, and that can change on a dime. I mean, the politics are extremely fragile, and anything can happen. But if the market or myself saw that, then uranium prices would be, to the moon. If U.S. utilities were anticipating that, I mean, you'd think that there would be an incredible supply or demand response to that sort of a potential. So when we look at kind of the urgency that we're seeing, and utilities can be frustrating, they don't often exhibit the urgency or incentivization characteristics that you might expect in other types of markets, for different reasons. But I think that the term market in 2023 was 160, just over 160 million pounds, I think. 140 million pounds of that, so a decade high in term contracting. 140 million pounds of that was non-U.S. utilities. U.S. utilities in the term market in 2023 were a decade low at about 20 million pounds. So I think that U.S. utilities are hanging back, waiting to find out what their buying strategy should look like, where they should be sourcing, and how they should go about it going forward. So I think that we're going to have a pretty robust term market in 2024, especially as we move through the latter half of this year, as we get clarity on the political situation. But I do think that Putin interfering with Kazakh supply to the Western world is going to be extremely difficult to deal with. It's such an important piece of the supply picture. Russia itself, extremely important in the fuel cycle in terms of supplying enriched uranium and conversion fuel cycle services to other parts of the world. But Kazakh supply, extremely important and would be just almost impossible to quickly replace, and could cause shortfalls. It takes time to build and commission mines and quickly source uranium, so there's only a few places that you could look to potentially buffer a gap like that. There's significant sequestered inventory in certain vehicles that maybe in some sort of an emergency situation at some much higher uranium price there might be some political way to access that, but that would be a pretty dire situation.
So let's turn the discussion to Premier American Uranium. What's the 2-minute elevator pitch for the company?
2-minute elevator pitch is we are set up to acquire, explore, and develop assets. We think that we have an unbelievable runway here in terms of fundamentals. In the uranium sector itself, we're focused on building out pipelines of U.S. assets in key states that have historic uranium mining. And we're going to be acquisitive, looking for projects that complement our existing portfolio. We've got ISR in Wyoming, we've got conventional in Colorado, and we've got conventional assets under this proposed acquisition of American Future Fuel in New Mexico. We're leveraging a team to execute this consolidation strategy that has an unbelievable amount of experience. Mega Uranium did it in 0506. Consolidated Uranium did it in the last few years. We were spun out of Consolidated. They provided a great exit for shareholders, contributed some assets. Premier Uranium, a private company in the U.S. that was created by one of our largest shareholders, Sachem Cove, who was actively staking, acquiring uranium projects early in the cycle in 2018, contributed some of the other assets within Premier and remain shareholders on a pro forma basis post-acquisition with American Future Fuel. Sachem Cove is going to own 32%. Extremely experienced team. We're going to retain Phil Williams, who's now CEO of ISO Energy, following Consolidated Uranium getting acquired by them. He's a technical advisor. We've got Tim Rotolo of Sachem Cove stepping in as our chairman. He was the CEO. I'm replacing him. Marty Tunney, who's the chief operating officer of ISO Energy, is stepping aside as chairman, but remaining on our board. So we've retained the team that was really the powerhouse behind the consolidation strategy at Consolidated Uranium. And, between pro forma, between ISO, Sachem Cove, Mega Uranium, and Encore, they're going to own 49% of our stock. And it's just an unbelievably strong shareholder base to continue to fund this acquire, explore, develop strategy.
I don't know if you want to speak to the Cyclone project or all your projects, but how much historical drilling has been done on your projects?
So on Cyclone, which is our ISR project in Wyoming, in the Great Divide Basin, in 2007, 2008, there was about 80 holes drilled there. Since then, we flew airborne radiometrics on the property, took that data, put it into a 43101 technical report, which outlined an exploration target of 8 to 12.5 million pounds at grades of about 0.06%. So if you know the Great Divide Basin, you know that Lost Creek has an operating facility, or Your Energy has the Lost Creek facility operating there. Up to the end of 2023, it produced almost 3 million pounds at an ore grade of 0.049%. So and has about, I think, over 14.5 million pounds remaining at Lost Creek at grades of 0.048%. And that's just to put into perspective our target on the high side of 12.5 million pounds, targeting a grade of 0.06%. We feel that drilling out that resource this year, we're currently working through permitting to start drilling in July. We feel that starting to delineate a resource at the Cyclone project is going to be a fantastic way to unlock value here, and eventually position it as a viable economic satellite to operating facilities like Your Energy's Lost Creek. There's other ISR facilities ramping up or planned to be ramped up in Wyoming. You got Irrigary with UEC. You've got Nichols Ranch with Energy Fuels. So it's going to be extremely active. Wyoming's a very, very favorable state and agreement state for permitting purposes. So all done at the state level. And, by proving up this resource and starting to position it as a potential satellite to an existing facility will help us transition it from a kind of in situ per pound type of valuation or market outlook on it to something more DCF related, something closer to production that people can kind of talk about, or that we can talk about potential cash flow from. At the same time, we're going to be looking at assets around that property to start to build out, our own hub and spoke potential strategy or, economic concept. So we're going to be really leaning on that acquire component of our strategy to build out assets that we could tie into existing assets and start to unlock value. So that's kind of the strategy. We will be drilling in Wyoming this year on this project to define that resource. On the American Future Fuel side, the Sebieta project, which is kind of the main target of the acquisition, they're kind of a one asset company. They've done over 35. They're in the database for that project, and it's a historic. It produced historically as well, but it's got over 3,500 historic drill holes on it, almost 570,000 meters, $75 million in kind of equivalent historic spend there. So a ton of money went into a ton of value went into that project to define. It has a historic inferred resource on it of almost 19 million pounds at 0.17%. That's extremely attractive to us. It remains on private lands, shallow, above the water table. So, extremely well positioned asset, especially for New Mexico, which, it can be challenging from a permitting perspective, but this asset specifically was identified by our technical team as the most attractive in the region, and it's something that we wanted. Puts us it will put us in three of the best uranium mining states in the U.S. historically. New Mexico alone historically produced almost 350 million pounds of uranium. It's the fourth largest uranium district in the world by historic production, and we think that with the U.S. specific catalysts that are emerging, that it's going to look extremely interesting. So phase 2 drilling on that project is planned to commence this summer, and there's going to be that work is going to be to confirm the historic resource. So a bit more confirmation drilling. They've already performed phase 1 drilling, and that came back reconciled extremely well with the historic drilling on that project. So we think it's going to be quite cost effective to bring that almost 19 million pound historic inferred resource to current status. And then we'll work on potential. There's also on that property, separate in the St. Anthony deposit, by a prior operator, they have an internal inferred resource estimate of 8 million additional pounds. So we think that with additional phases of drilling, we can bring in a bunch more of that of those pounds, and potentially look at something in the 25 million pound range from that New Mexico asset. So that's kind of the program for 2024. There's going to be exploration results coming from New Mexico and exploration results coming from Wyoming to deliver kind of the news flow that we think is going to be quite positive. And kind of the other prong of our strategy is going to be to add properties in the region of the assets that we already control. We also have kind of two key projects in the Uravan mineral belt of Colorado, both with historic production. The Monogram Mesa and Atkinson Mason projects both produced around 5 million pounds of uranium, of U3O8 historically, over 20 million pounds of vanadium historically from both separately. So substantial historic production. The Atkinson Mesa project has the old King Solomon mine on it. There's underground workings there, a lot of infrastructure. That's going to be probably a 2025 story where we're putting some money into that. We're in the process of acquiring historic production data and some historic exploration data and other key technical information to kind of plan our strategy and approach to those projects. But we definitely think that there's a great potential to delineate a resource there and potentially create a economic mining scenario in the future.
Okay, so Colin, last question for you. If I'm an investor or I'm a potential investor doing my due diligence and I want to know what 2024 looks like, or the rest of 2024, what am I watching out for over the remainder of the year?
Well, from our side, I think you're watching for the drill results. If we start to delineate, if we look like we can back up that resource target in Wyoming, I think it's going to be transformative for the Wyoming portfolio. If we can make acquisitions, especially in the regions around that project or other projects, you'll start to get a sense that we're going to be successful in building out our own economic concept in a region that's extremely favorable to uranium mining. I think investors, I think it's a good opportunity right now. The timing's very good to be revisiting your uranium names. I think that uranium price being on pause here is very temporary. As I mentioned, as an analyst, I had $110 average price for 2024. That has nothing to do with where I think that prices are going to peak. There's a lot of different events that could happen in 2024 that could cause the price to go much higher. So because the uranium price has been so volatile, part of the rationale of a uranium price deck, from my perspective, was what I said before, was making sure that I put the highest marginal cost production in the money, so that the supply gaps can be filled. The potential for higher prices is definitely there, but it's extremely hard to call, especially when you're looking at an average for a year. So I think the fundamental backdrop for uranium is as strong as it's ever been, and you've got a global movement towards recognition of uranium and nuclear power's role in meeting carbon emissions, CO2 emissions goals. And, I think the US and 21 other countries committed to triple nuclear power generation by 2050. I mean, there's so many different sound bites like that just continue to highlight that we need substantially more uranium production, exploration, development, all the things that higher uranium prices are going to be required to kind of incentivize. So I think this is right now is a great opportunity to kind of revisit, re-enter the space. And, depending on your risk tolerance or where you want to be, that's more of an investor specific decision, but the uranium space in general, I think I'm very bullish. And it's one of the reasons that I made the decision to move from the sell side. I had a extremely good relationship and peer group at the company that I left, and it was a difficult decision, but I think that I just haven't seen an opportunity like this in my career. And with this vehicle and this team, it wasn't that hard of a decision.
And well, Colin, thanks very much for hopping on here, and hopefully you'll come back on in the future after you hit a major discovery.
Yeah, I would love to. Appreciate it.
Thanks, Colin.
Thank you very much.
All right, everyone. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.